Awesome, guys.
Roll 'em.
Guys, I want to officially welcome you here. I am here with the legend himself, Robert Stone. Let me just get a couple accolades that you've done. So there's the taxes that you go through, that you help people with, as well as investments, as well as mortgages, life insurance. Anything else you want me to mention?
I don't know, shoe shining, taking out the garbage. If we could add a few things in there. But I think you nailed it on the head there. We start out with taxes, and that's the main bottleneck for a lot of people getting into their own business. Mm-hmm. You know, they file their taxes every year. It's a straightforward process. There's a lot of ads online. You can get it done for between $30 and $50, somebody on Craigslist. But are they doing a great job for you? But where the big problem starts is when you make that transition from employee to business owner. You know, when you get involved with me or some of his group or team members that are in business for themselves, that's where all the problems really start to arise, because tax is basic for most Canadians. 50% of Canadians file their own tax returns. But those are only T1 generals, the basic T4 income slip. Mm-hmm. As soon as you get into self-employment, then that's where you should bring in some help, bring in the big guns.
Yeah, so let's talk about that a little bit. Let's talk about, first of all, the advantages of having a business as you're working part-time so that you can essentially be self-employed while you're working at your job. So what are the benefits of starting a business part-time that you found in your experience that people should know about?
Well, there's a self-satisfaction, doing your own thing for yourself, not having to answer to a boss, not having to clock in, make it through rush hour traffic every day. I'll just actually tell my own story, how I actually went out to work on my own. I started in the trades. I ended up getting a couple, back office bookkeeping jobs. I ended up working for the Vancouver Food Bank for 7 years. After 7 years, they terminated my employment, and I thought it was the end of the world. Until the next morning when I didn't have to commute 1 hour from Surrey into downtown Vancouver, fighting through that traffic. Mm-hmm. And then I sat down running the numbers. Numbers came easy to me throughout the years, but I ran the numbers, and it cost me about $25,000 to commute to and from work every year.
Wow.
When you count in, the 2.5 to 3 hours a day commuting, that's a third of your salary. Mm-hmm. If you're making $60,000 a year, that's $20,000 in salary. That's not including the gas, the wear and tear on the car, the insurance, all of those things.
Definitely.
And the stress that it causes. So that's when I actually went out on my own, was early 2000. Went out and started doing income tax work out of the house, and it just evolved from there.
And I really like that you brought that up with the commuting and how it actually was a third of your expenses, because a lot of the times people don't take that into consideration when they have a job, is that going to and from work and the headaches that come around traveling to work, that takes a lot of a toll. And one thing that we actually spoke about was a benefit was when you're a business owner, a lot of those things you can actually start to write off. Right? So let's transition a little bit into that aspect of things. As somebody who owns their own business, yes, you're working your job, you have a business or a little side hustle that you have going on. What are some of the write-offs that you can actually write off so that you can get back with your taxes?
So let's talk about the two main types of business. One is just what they call a sole proprietorship. So Nee here has an opportunity that he will point you to at the end of the video, probably a link somewhere, that he does. And the second type of business is actually incorporating. You actually register with the provincial government or the federal government, a new entity. But both of them have the exact same write-offs. The line numbers on the two different tax returns are the same. So the self-employed actually gets attached to your personal tax return. The corporate tax return, if you incorporate, is separate. Now the corporate tax return, there's benefits once you reach the $100,000 mark and up. Somewhere around there, you should definitely be talking to an accountant to take advantage of additional, not write-offs, but additional tax strategies. But the write-offs for both are the same. So what are some of the write-offs? Well, 99% of you out there listening have your own phone. If you have a job, or you have a 9-to-5 job, the JOB, just over broke position that you have, you can't write off your phone. As soon as you become self-employed, you can keep that job, have a part-time gig doing self-employment or doing something that you create yourself. Now you can write off your phone. Now you can write off part of your home. The home is the biggest write-off because most people are paying between $1,000 and $2,500 a month for either rent, lease, or mortgage interest. But now you can write off a percentage of that based on how much of your home space you're using. Your vehicle, now you can write off your vehicle. Every time you go to the store, if you're picking up paper, supplies, pens, video equipment, computer discs, whatever it is, now you can write off that trip to the store and back. And you can write off all those things that you purchased.
Wow.
So that's just the short list. We have a simple spreadsheet that I'm sure Nee will put in the links below. It's a simple Excel spreadsheet. If you're not good with Excel, print it off. Do it the old-fashioned way with pencil and paper. But that's a starting sheet where it lists all the different expenses that you can use.
That's really cool. That's really cool. And I like also that you brought up about the two types of different businesses where there's sole proprietorship and incorporation. And in my journey as an entrepreneur, this is actually a question that's come up a lot that I want to touch on. But before we get to that, let's talk about what happens for the average person who's earning around $30,000, $40,000 at their full-time job. Right now, you started this part-time hustle. You got your cell phone bill that you can write off, your mortgage payments, your rent that you're writing off. What does a return sort of look like based on the numbers of around $30,000, $40,000?
So let's say you have a job, and you're going to leave me hanging with that corporate question, right? So we'll start off with just the basic self-employment. So let's say you have a job making $40,000 a year, $20 an hour. You're paying probably about $10,000 of that in tax. But you're also paying for rent. You're paying for your car anyway, your phone, your computer, your internet. Potentially you're in a relationship. So your spouse is involved in the business. So they're helping. They have a job also. So you don't technically write off your spouse. That's the wrong term for it. But your spouse and you can share those expenses. So what we do if somebody's in a relationship like that, common law or married, we will adjust the expenses to the person with the higher income to bring their income down into a lower tax bracket. And it jumps on an average of 4.5% each tax bracket. There's 4 tax brackets.
Wow.
So we're looking at 19, almost 20% in tax savings.
Wow.
And most households have about $10,000 in expenses that you're spending anyway. Even if you're living in Surrey with lower rents out there versus downtown where it's through the roof. The average household is about $10,000. So if you're making $40,000 a year, if you get involved with Knee's side hustle or another opportunity, you end up creating your own little business. You can then get that $10,000 in tax that they took off your paycheck every month, all year. You can get that money back.
Wow.
And we've seen it time and again. We've done a few tax returns.
Yeah, and just think like the money that you're helping people get back, because it's essentially that's money that's gone, right? But now you have the opportunity to get that back, and you can invest and do some things for the family, maybe do some things for yourself. It's amazing. It's amazing.
Get your own little side hustle going with some spare cash. Go to the casino if you want.
Yeah, definitely.
I don't recommend that. Although casino winnings are 100% tax free. That's in Canada.
Oh, really?
Yeah, casino winnings in Canada are tax free, not in the US.
Interesting. Yeah, so I want to bring it back to the question of sole proprietorship and incorporations. One question that has come up a lot for me personally is when is the right time to incorporate? Because a big thing that has come up is there are 2 reasons why you should incorporate. One is either because of tax, save for tax savings, as well as liability, right? So there's a liability clause or a liability situation that's going on that causes people to also want to incorporate. So just based on your perspective, when is the best time to incorporate? And depending on whether it is for taxes or whether it is for liability, what do you normally advise on
this guy's been doing his homework, right? That's the exact 2 reasons why somebody usually wants to incorporate, is to either save additional taxes or take advantage of some tax strategies. Because the tax savings are the same. If you're writing off your rent as a proprietor or a corporation, it's the exact same amount. The only difference is corporate tax is at a lower rate. This year it's dropping to 9%.
Wow.
And some opportunities out there are based in the US. So what some of the people out there are doing that have a US-based network marketing company or the opportunity that Knee's involved with, their US-based pays them in US dollars. So why not incorporate in the US? But they require you to have a US corporation or a limited liability company, it's called in the US. But then you make 30% more money from the get-go because you're paid in US dollars, but then you transfer that cash to your Canadian account through an invoice, but it has to be a Canadian corporation. So that's one reason, is for the tax savings. Liability, somebody who's in the trades, somebody who's framing houses, you know, somebody comes along and steps on a nail and they get gangrene in their foot, you can be sued. So there's a huge liability component. You know, with your opportunity, the liability is not so high. It's more for the tax strategies. So those are the two main reasons.
Nice. I like that. I love that. And there was some stuff that I wanted to ask you personally in regards to.
Yeah, we keep it PG, right? We're going to keep it PG, right?
Wait for the R-rated session. Just kidding. Just kidding.
Not kidding.
So when it comes
Film at 11.
When it comes to like stocks and essentially having shares in a company, I know with incorporations you can essentially divvy up like shares within family members and kind of share the wealth that way. Do you mind touching a little bit on that and how that is an extra benefit that can come along with having an incorporation, like incorporating your family into your business?
Well, sharing with the profits. If you have a corporation and you have children that are 18 and over going to school, as of last year, you can take $35,000 a year out as a dividend, but they have to be what's called a preferred shareholder. There's two types of shares: it's stock or investments, whatever you want to call it. But those shares, if somebody's 18 or over, it can actually take money out of the corporation tax-free. But then what happens is the kids form a union and they say, "Dad, you know what? You told the government you paid me $35,000 last year. Where's my money?" Right. So you have to be careful on the planning side, but it comes into play as well in a sole proprietorship, because what you can do if both household members, if you're in a common law or married relationship or whatever other relationships they have going on now, but you can split income between spouses, and it's perfectly legal, and that's done on the T2125 down at the bottom. It asks what percentage of the business that you're running does your spouse participate in. And there's a lot of realtors, mortgage brokers, not just the network marketing industry or multi-level marketing or education industry that does this. Realtors ask me all the time, is it okay to put my wife on? She stays at home and she actually answers the phone, you know, for all the real estate calls. She takes all the messages. She runs, you know, all the deal papers to the brokerage when I'm out showing homes. So your spouse is actually working in the business, but the government doesn't investigate that. They just allow you to split up to 50% with your spouse.
Wow.
So if one spouse is in a very high income bracket, you know, your wife's a doctor or she works at a high income employment job, and you're getting the business going on the side, then you're going to shift all the expenses to her side. So she gets some of the tax taken off at her employment back. And that's how it works. And it works the exact same way in a corporation, except in a corporation, you're going to do it through shares.
Okay. Can you explain a little bit and elaborate on how that process would work through the shares? Through the shares.
So when you incorporate a company, it asks, who are the shareholders? And usually we ensure that if there is a spouse in the relationship, that they go on for at least a minimum 1% of the common shares.
Okay.
The reason why you want to do that is if anything ever happened to the main breadwinner and they pass away, if the spouse isn't on for any shares, what happens is the company could go into probate. And if you get a big whack of cash sitting in the bank, we've seen it happen, where it gets tied up in probate and the government actually takes control of your account and they decide who the money goes to. If you don't have a will, if you don't have all of these things planned. You know, and that's some of the things we do when we work with clients. We start from A to Z. You know, we find out if you have a will, we find out what your assets are. We find out, you know, if you have insurance in place for different things, not just on your vehicle, etc., but on the lives of the important people in the family that are bringing income in. We find out what your investments are. We find out what your retirement plan is. A lot of people don't realize that they can retire sooner than what they think they can retire. Once you start adding all these things up and putting them in place, a lot of people forget that they're going to get CPP and old age security when they retire, which will supplement your retirement income. So we do all of that through the Life Plan Manifesto program that we put on. And we do that with every client that actually comes through our door. You don't have to go to the workshop or buy the online course. Everybody who becomes a client of ours, we put them through that whole process. We actually help them make a decision on whether or not they should get into business for themselves. And we've vetted a lot of businesses that we know are good. You know, the opportunity that you have, that you're involved in, is a great one. We have quite a few people in that business that are making over $1 million a year online. That's why we're starting to do a lot of online stuff, because of what you guys are doing.
Definitely. Because that is the way to go with what's going on in the economy right now. The internet is taking over. Yeah, and so I appreciate the time that you have spent with me, Rob. It's been phenomenal picking your brain apart. I know there's a ton more questions that my audience probably has, and I know there's definitely some questions that I have as well. Is there a way that we can get in contact with you, essentially to seek out some of your services, or if we can actually want to get our hands on that life manifesto life plan manifesto, how could we do that as well? Because I've seen a little bit of the behind the work scenes and that.
The easiest way we do, one of the things we do for everybody who wants to come on board and test us out, we do a free tax review. We go back over the last 10 years, and the step where we do the carryback, what we call a carryback, we'll look over your last 10 years, see what you've missed, see what the government owes you, see if there's any back taxes you're entitled to. And we do that absolutely free, but then when you come back in, what we call the carryback, either we go and see you or you come in and see us, or we do a Skype call, we'll review that with you. And then we go over all of those steps. If you're wanting to go forward and look at, you know, how much you have in your CPP for retirement, we can order that document for you from the government. We can look at your past returns, find out. We can look at your existing insurance policies to see if they're adequate. Maybe you're paying too much for insurance. Maybe you don't need it. Maybe you can cut that back a bit and use that money and allocate it somewhere else. Maybe if you have children, you can allocate some of that for their education plan. It's all about planning. One of the biggest things we do is help people get into their first home. Right? We do a first-time home buyers plan workshop and seminar. But if you're a client of ours, we actually just go through it with you. You don't have to come into the seminar. We just go through it with you as part of the process. Show people how to get into their first home. You know, the most efficient way to do it.
That's
Not only
amazing.
Tax-wise, but savings-wise on the investments.
That's amazing. Definitely. Well, I definitely look forward to all your services and what you're doing in the community right now. I'm excited for what the Life Plan Manifesto is going to do for the lives of so many individuals. Rising entrepreneurs, thank you so much for your time. I appreciate you being here. This is the legend himself, Robert Stone. Thank you so much, my man.
Awesome.
It's a pleasure. All right, guys, we out of here. Peace.